Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny Burt. The Dividend Diplomats. We are going to talk to you about a stock that got crushed, that got demolished after earnings. Guess what, though? Despite the bad report, the bad guidance, this company still increased its dividend, and they continued their journey to becoming a dividend aristocrat. Buckle up, get ready. We're going to talk about this high-yielding 4.5% dividend stock right now.
Guys, smash that subscribe button. Give Bert the Herd and I a nice thumbs up. Let's get to 19,000 subscribers. Let's drink some beers. Let's get to financial freedom. Juice up that passive income stream. It's all about personal finance here on this channel, guys. And we're trying to bring you as many dividend stock news as we can, whether it's dividend increases, dividend stock analyses, dividend stock purchases. Oh, and stay tuned tomorrow for a new dividend stock in the marketplace, guys. But we also talk about what type of news happens on certain stocks that we own that impact the dividend investing community.
Yeah, you're dissecting. You're getting to see some of our instant reactions here because some days some stories are great. Sometimes we're talking about all those great double-digit dividend increases, and sometimes we're talking about the duds and the bad performance, and we're staring at a company that's in the red asking ourselves, what the heck are we going to do? This video is going to find ourselves in that latter category because we are going to be talking about UPS, ticker symbol, my favorite, UPS. I love when those tickers match the company name, Lanny.
I love you, Cleveland. Yeah, we are talking about United Parcel Services, UPS, UPS, the big brown truck, bringing boxes obviously to your doorstep. They've had a tough 2023. In fact, I was on the road and have achieved 100 shares of UPS on that road. They had a huge labor contract, very expensive labor contract, billions of dollars of increased cost contract. When you pair that with what they released in their earnings with a decline in top line revenue and lower forecasted earnings than what the estimates were saying for going forward in 2024, you're about to get stone cold stunned to the ground from a stock price standpoint.
And that's absolutely what happened because just talking
Well, I
about.
thought you were going to say, and that's the bottom line.
Oh, no, I can't. I wish I should. I missed my opportunity there. I really did. You teed me up perfectly for that one, and I choked. It's all right, though. I mean, revenue is down 7.8%. Operating margins down 9.9%. To your point, higher costs, higher people costs. That's going to happen. That was just bad news all around, unfortunately, with that. Bad news. They said they're cutting 12,000 jobs. It's going to save them $1 billion, billion plus, but those are real jobs for people that just went out the door. And it just makes you wonder. And it's the not the unintended consequences, but like that is the unintended consequence of what happens with the strong union deal. The higher cost for for all the employees is great, but there's less money to go around, so less people that you can employ if you want to keep earning and keep growing your earnings, cash flow, and keep raising that dividend.
Yeah. I mean, they earned $1.87 diluted EPS, and after that dividend increase, they pay $1.64. So their current, payout ratio based on just the last quarter earnings is very tight. You're kind of heads hitting the ceiling there from a payout ratio standpoint, which we'll get into. But Bertie, yeah, I think what we're going to see with some of these companies, including UPS, and I can name a few others, and we might put a video out there related to it. Kind of goes hand in hand is, maybe for the next year or two, you might see lower dividend growth for a lot of companies. And then on the right hand, they're going to be cutting costs to hopefully set up a better tomorrow, right? That's the better tomorrow kind of tagline here. And UPS, it seems like, is no different.
That's kind of what you have to do because when the Fed announces that it's not giving anybody any relief, the rate hikes aren't coming down, and not the rate hikes, the rate cuts aren't being reversed as fast as everybody thought. It just leads to what's going to be a kind of stagnant 2024 where no news to pop, no news to drop. We're just going to kind of ride it out, and especially during an election year too. I don't know how much is going to really change. So It's unfortunate, but that's just where we are, and that's what's going on with UPS. So let's see. Let's run them through the screener, Lanny. You know what? Let's run them through our
Let's
three
get there, man.
metrics.
Let's push him through the screener.
Yeah, PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. This first metric here, UPS's price is 142.21. Forward earnings per share are 826. PE ratio 17.22. Yeah, not bad. Kind of caught me
Yeah,
off guard, Laney.
yeah, not cheap,
Mhm.
not expensive. Possibly some room to still go down on the stock price here. Um,
Yeah,
Good
yeah,
old UPS, man,
yeah.
down
That's
10% right now this year already.
Yeah, that's what kind of shocked me. They're down 10% and their PE ratio is still 17.22. So that goes back to your theme earlier of what you're expecting with earnings and how stagnant it's going to be. There's just the price matches what's going on with their earnings. Sorry, we're not in a more positive tone about this right now. That's just kind of how you feel when you're looking at UPS's earnings results.
And the delivery companies have been through this before. It's not the first time they've had to do a labor union deal. So
No.
the companies will have to make decisions. They're going to be hard decisions, but that's what they have to do. Not to
Yeah.
say to survive, but to get back to shareholder returns, right? Because we are the shareholders.
That's right. But I will say, this is all right, sidebar here. I have noticed a lot more Amazon delivery trucks themselves. Like there's a lot more Amazon out in the neighborhood, which was always the fear for UPS and the fear for FedEx was, is Amazon ever going to take over? And it might not have been a loud bang that, hey, Amazon's here, contracts are canceled, but they've slowly chipped away, built up their infrastructure to the point where you're seeing all of those Amazon delivery people taking their packages instead of UPS trucks dropping stuff off.
Oh yeah, I mean, yeah. As soon as you can have drivers just sign up as well, kind of like Uber, you
Mm-hmm.
can just deliver packages for Amazon.
Yep.
Sweet. Yeah, just go to the warehouse, pick them up, drop them off. Yeah, go ahead, go to the storage facility.
Yeah.
Let us know in the comments if you guys have ever done that for Amazon. I'm
Yeah.
curious.
All right, let's see here. We left off after one. Sidebar's over, so let's go back into this. Payout ratio. They just announced the dividend increase from 162 per quarter to 163 per quarter. Ooh. So their new annual dividend 652. Ooh, Laney, this payout ratio 78.93%.
A
Whew,
little tight, a little tight, tight for my liking right now.
very tight for my liking. And obviously, moving to that third metric, the 5-year dividend growth rate for UPS is 12.23%, increase for 15 years, but clearly that 1 cent per quarter increase is nowhere close to what their 5-year average is.
No, it's not. Not to say that in a mean way. It's just, hey,
It's a fact.
there's going to be some tough times. I'm gonna, keep collecting the dividend, reinvesting at the lower shares right now. But yeah, their stock price is down 10% this year, down 25% in the last 52 weeks, up 32% in the last 5 years. Um, you
Yeah.
know, my, quick recap, 17 PE, 79% payout ratio. Again, been increasing the dividend for quite a while.
Yeah.
Yield is 4.6%, but yeah, I'm currently dripping shares, not adding to it just because I did top my share count out. Now, if I had like 95 shares, I would have probably just
Got
said,
it.
all right, let's just get there. Hmm, Not adding, but reinvesting.
Yeah. I'm in the same boat here. I clearly don't have 100 shares like you do, Annie. But with that being said, it's worth
That being
watching.
said, I'm going to get there now. No,
Yeah. No, it's worth watching. And if there might be a day where I just say screw it, I just feel like buying another share of UPS, even though the metrics aren't screaming buys right now, just to add to my position. Wouldn't be terrible. UPS, sure, it has its issues. There's FedEx, there's Amazon that they're competing with. They're dealing with a lot of these costs, but still, your point was very valid from before, Landy. The shipping industry isn't going anywhere, and people still need stuff delivered.
unfortunately, it is. It is not. Now the question is, though, is it going to be non-Amazon purchases? I think that's going to be the true question.
Something worth watching, and I might be at least on hold till we start seeing more quarterly results next time, just to see what's going on with that payout ratio.
I couldn't agree more, guys. Let us know in the comments what you're doing with your UPS stock. Did you buy the dip Did you buy the dip? We haven't said that in a while. Did you buy the dip on UPS stock? Are you looking at that and salivating at the 4.6% dividend yield for the big brown truck? Because it is 150 basis points higher than a 5-year yield average. Let us know in those comments below, baby.
Yeah, if you haven't already, subscribe to the channel. Give this video a thumbs up, and remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt Locker, and Lanny, the dividend diplomats, over and out.